Okay. Uh, Hi, and thanks for attending our first Qardus webinar. The topic of this webinar is Unlocking 2025, Top Investment Trends and Opportunities. And we're very lucky because we've got two great panelists here. So we've got Saif Shawki from Dubai and Dr. Rumi Masih as well from the US. I mean, the purpose of the Qardus Roundtable is to have interesting conversations more than anything else. So it's about we're not looking to have a very scripted format in the sense that Q&A and all that kind of thing. Rather, it's about having very interesting conversations where we could deep dive into different subject matters and introduce our audience and our listeners to lots of different topics. With the first topic being, with 2025 coming across, what's the best way to invest if you want, or what are top investment trends and opportunities that we could look at as we go into the new year? So, I mean, first of all, Saif and Umi, thanks for your time, and maybe we could start with a brief introduction if you could tell us a bit more about your backgrounds, and then we could take it from there, please.
Sure. Thank you very much, Hassan. My name is Saif Shawki. I'm the Director for Islamic Finance at Fitch Ratings, where my mandate is covering Islamic banks, sukuk, takaful companies, and Sharia-compliant corporates, and to some degree, sovereigns. We're living in interesting times when it comes to Islamic finance. A lot of growth potential, but of course, not without its challenges. And it's a pleasure to be here, Hassan, to share Fitch's view on how we see the industry going forward.
Okay, thanks very much.
Thank you, Hassan. Thanks for the opportunity. Hi, folks. My name is Rumi Masih. I'm president of a digital bank starting up in the US here. I'm also on various funds across the board, mainly in infrastructure and private equity. I'm also a professor in finance at a business school in Australia. And, my history is really in Wall Street firms, Goldman Sachs, JP Morgan, and Bank of New York Mellon was when I first last headed out of. And I've also was at Sama in Saudi Arabia as well for about over a year on the investment management side. So I'm really looking forward to bringing all of that together in this conversation. I'm looking forward to a lot of engagement going forward.
Definitely. So yeah, thanks for that. And when we look at basically, I mean, the way we're going to do this is if we could initially start with just looking at the economic outlook for 2025, and then we could probably give an overview of the different asset classes, given that we're a Sharia-compliant platform, the different asset classes in Islamic finance, but less about maybe discussing the structures, more about discussing opportunities here, because I mean, when it comes to discussing the different asset classes, anyone could go online and read about it, see what equity screening criteria are, etc. So it's more about giving a brief overview, but then discussing where the opportunities lie, and then maybe we could finalize with key investment trends, and then go for Q&A and see what some of our participants think. And so if you begin basically with the economic outlook, right? So when we're looking at the economic outlook, we're looking at a lot of moving parts over here. So on one side, you've got a new government, obviously the Trump administration coming in the US. We've had high inflationary cycles over the last couple of years, whether it's in Europe, whether it's in the US. Now, I mean, some people are probably thinking inflation might reappear depending on some of the strategies, as we were discussing earlier, Dr. Rumi, around maybe tariffs will generate inflation. Then you've got possibly deflation in China. You've got geopolitical risks coming out of the Middle East, like really big risks there. So when we look at the economic outlook and we look at these different elements, I mean, first of all, what are your thoughts on that? And what would you think are potential risks and opportunities going into 2025?
So if I might start, look, I think the key word in your prologue, Hassan, is differentiation, right? The world isn't going to be monotone any longer if you had thought of it. And I think the consensus would be that there will be a soft landing in the US, and inflation is certainly uh, being contained as we came out of COVID, and that's being indicated by Fed behavior, in terms of cutting rates. The spanner in the works, I think, is an interesting one, because now that we will have a new Republican administration coming in, there are tangible uh, reasons and room for consternation around reflation, right? And to what extent the Fed, how aggressively they can cut, because housing sales in the US are at a 30-year low. You've got a very, very tight labor market. I wasn't a proponent of recession previously, just because I can't see recession when you've got unemployment, less than 3%. However, given the, if you like, the aggressiveness of the dialogue we're having coming out of the forward administration, it seems to me that the aggressive tariffs will be posted against China, and that's a concern, because not only from a point of view of uh, how less aggressive the Fed can be as an indirect result, but also what China does in terms of countervailing policy, right? So I'm not a proponent that that just necessarily means doom and gloom for emerging markets. I think this is going to open up the doors for a lot of emerging markets as the US diversifies its supply chains away from China and more to other EMs that are less impacted by tariffs. So I feel that that's going to be an area of differentiation. Secondly, I also feel that given the trajectory that the new administration has indicated in terms of easing of financial restrictions, and we were just talking about this a few minutes before the webinar started, that in my career I always seem to see that whenever there's a crisis, and the most recent one, if you can recall, is 0809. A Democrat administration comes in, and they also bring with it heavy regulatory policies, right? And it seems like the pendulum seems to swing from where it was in the balance on the Bush administration to, let's tighten up regs, let's tighten up risk, and that the fallout of that was, JP Morgan closing down its commodities business and other related epitaphs that followed. So now I feel that it's going to go the other way, right? You saw the uptick now in crypto assets, going from 65 now to over 100. It's kind of euphoria. The new administration has also indicated that it wants to be the center of easing of crypto and the crypto czar that's been put into place. Also, the new Fed chair, potentially a hedge fund, ex-hedge fund gentleman. So, it's all pointing towards freer flow of funds, more access to capital. But I also feel that this is going to be a very interesting opportunity for the growth, which we've already seen, the insurmountable growth of private credit in the US, right? Private credit has gone absolutely berserk, which I think has its good sides and its bad side as well. But compared to fixed income markets, private credit has done immensely well historically, low correlated to other asset classes, very has downward protection in terms of macro downfalls, and it also provides a lot of diversification benefits. So I think where Qardus is coming in, and I know Qardus is focusing on Sharia, it's a very niche area to look at, right, in terms of the overall holistic growth in private credit. So they're just a couple of the opportunities, given the macro backdrop, which I feel that, it's still going to be continuing on with fairly stable growth. but lower inflation, lower than what we've seen obviously in COVID, but obviously an uptick for volatility, depending on the outcomes of what implementation of policies that the new administration takes. Remember, you've got to judge by implementation, not by just rhetoric, right?
100%.
So that's a key factor to weigh in terms of your investment policy going forward.
100%. And I mean, Saif, if we speak on that for a bit, just in terms of the macro effect as well, like when we're looking at credit risk here, right? What are your thoughts on basically the big question that everyone has around sovereign credit risk, right? So, I mean, obviously textbooks would tell you that there is such a thing as risk-free, right? But at the end of the day, the numbers have to add up now. So there are consequences to printing money. And whether it's in the UK, in the Eurozone or elsewhere. So, I mean, what are your thoughts on credit risk in general? Because that's a big point here in the sense that we don't really know where we're heading with some of the debt piles sitting in that some of these governments are sitting on, basically.
Thank you, Hassan. It's a great question. I think it's good to zoom out a little bit and see where the core Islamic finance markets are from their perspective. With the GCC specifically, and Malaysia, Indonesia, and Turkey. So 6 of the top 10 Islamic finance markets, they're actually all exporters, right? And the oil prices have been fairly stable over the past 1 year, and that is contributing to the growth in many of these countries and supporting the credit story per se. If you look at the sovereign ratings of the GCC countries, 4 of them out of 6 actually are investment grade, but all of them on stable outlooks. And this is despite all the economic volatilities, geopolitical risks in the MENA region as such. And the risks are actually contained from a geopolitical perspective. We haven't seen the reverberations reach to the GCC shores, at least. Having said that, the interest rate environment is also interesting because we at Fitch forecast the Fed fund rates to be cut to, it started at 5% in September with the cuts. We expect to reach 3.5% by 2025 end and stay at the same level till 2026 end. So what does it say? It creates a more favorable funding environment when it comes to issuers, whether it be sovereigns, corporates, or even FIs in this part of the world. And even if you look at Turkey, if you look at it actually got an upgrade a few months ago. Even Qatar, it got an upgrade a few months ago. So the sovereign story, while I can't comment fully on the sovereign picture, we have other analysts who can go deep into that. But so far the outlook has been stable overall. And interestingly, if you look at the GCC specifically, there hasn't actually been any defaults, both in the Sukuk space and the bond space, over the past 12 months. So it speaks to the credit profile, and especially on the Sukuk side, actually the Sukuk defaults are very rare. So only 0.2% of all Sukuk should have actually defaulted till date. So while the credit dynamics are there, while the macro factors are there, the outlook for the Sukuk market is worthy, and we're watching it very closely.
Okay.
Yeah, and I think also, Hassan, it's best to mention that I think, we always talk about this and we wait for it to happen, but the strong dollar policy that we've seen since the Rubin administration, since the early 90s when Bob Rubin implemented this, it still has prevailed, right? You've got a fairly strong dollar against other currencies. So I think there's a question out there that, if the new administration is favoring, whether it favors and implements policies again to favor a weaker dollar, what that means, right? Vis-a-vis trade and as Saif mentioned, sovereign risk in other countries, because this may be the first of its kind in terms of how it helps. And I know Trump has already come out with the BRICS threat, right? That the BRICS economy don't collude. It's going to be bad news for you if you guys think of doing that. But I think he's a proponent of trying to stimulate the manufacturing sector. We're in a manufacturing recession here in the US, and the steel producers are just celebrating now, given the prospect of tariffs. So I think that may be the first time we may, in like 3 decades, right, see the at least onset of a weaker dollar. I'm not saying that it's going to, dollar-denominated assets dominate, as Saif alluded to before, but I think it's going to be maybe the onset of a weaker dollar,
Yeah.
and what that could mean, because he's not going to be, certainly one thing, he's not going to let the history dictate the way forward. He's going to, especially in the first 2 years, right, before the thin majority in the House flips, he has both, Congress on his side, and it's going to be really interesting to see what he really forces through on all fronts, right? Taxation, regulation, uh, policies going forward that'll impact the financial market. So I think that's going to weigh heavily on sovereign risk as well going forward.
Yeah, I agree. I mean, it's definitely the case. I mean, we're going to discuss fixed income in a bit and see maybe how. I'm not sure, say, for whether we're going to be discussing pricing as well, or how the schools are priced. So that would be very interesting as well. But I mean, given that most of the investors on our platform are predominantly looking to invest in a Sharia-compliant way, it would be good to discuss the different asset classes in Islamic finance and maybe talk about the opportunities and risks in each asset class. So if you begin with probably the most common, most known asset class when it comes to Sharia compliance, probably equities. When we look at that, I mean, anyone could look up the Sharia screening criteria that's available at the moment. There have been discussions around the Sharia compliance screening criteria, and to what extent it really reflects basically the Sharia, because you've obviously got the financial bit that comes into place, whether it's 1/3 debt and all that kind of stuff. And then you've got obviously the qualitative components, and obviously you've got the sectors and how that works. But Dr. Rumi, I mean, what do you think of Sharia compliance screening criteria in general, and how do you tend to invest when it comes to equities in a Sharia compliant way?
Yeah, look, I think the key question is, how do you access Sharia compliant? How does it sit in your portfolio?
Yeah.
Because most portfolios, have exposure to equities in one way or another, and that contributes to a over disproportionate amount of the risk in your portfolio. So it's not just the screening tools, but what kind of themes you want to get exposed to, even in a Sharia compliant way. And I think the more you kind of dig beneath the surface in terms of exposure, the more upside or downside protection you're going to get. So even if you look at Sharia compliant, how do I access Sharia compliant? There's a lot of Sharia compliant across sectors, right? Do I use a profit benchmark? Do I use a growth benchmark? Do I use some kind of a DCF formula to look at valuation? Do I look at thematic? And that's where I was thinking of going. If you look at a thematic approach to Sharia compliant equities, right? Do I go towards the burgeoning middle class? Do I go towards more tech, AI related? Do I go towards certain companies that can absorb volatility? Do I go towards sectors that can actually look towards ESG, initiatives? That's the one thing that you hear all the time. And you talk about screens. I think screens is no more important in ESG than Sharia, because everyone has their own, ESG metric, it seems. So I think it's a question of how you access equities. I think there's a lot of room for upside in Sharia compliant equities globally, because the valuations in the US is looking very, very stretched. But I also feel that if you do that in a very cogent way, and you look towards exposure across themes and what are the prevailing themes going forward, it's a much better way than an opportunistic approach. Opportunism has its costs. If there's volatility, you're going to pay for it. And let's face it, investors always look at the rearview mirror. Always, right? And the rearview mirror, it's a question of how much weight goes into the rearview mirror in terms of your policy going forward. Rather than that, if you use a thematic approach, you can be ahead of developments and ahead of markets, seemingly. And there's no more of a poignant example in my mind, having lived through the crisis. I'm sorry, I'm giving you my age. But when I was at JP Morgan over the financial crisis in 08, 09, if you think about equity, if you think about real assets in general, if you look at commercial real estate market, you know, the green light wasn't given until about 2012, right? Almost like 4 years after the crisis. Yeah. And, you know, by then it was almost like, why are you so late going into the game? So sometimes it pays to be a contrarian and being ahead of the curve. And I think now is one of those times.
Yeah, yeah. And do you see a disadvantage when you're looking to invest in a Sharia-compliant way to the conventional way, whether it comes to hedging your exposures, whether it
Absolutely. Absolutely. I think a key component that we got out of the crisis, and I'm sorry to hark back on it, was that, you know, investors came to us and said, Rumi, why are we using this measure of risk? You know, whether it's CVAR or whether it's, you know, conditional, some kind of a conditional KPI measure on risk, are we really measuring risk in an appropriate way? So for me, Sharia compliancy offers downside protection because of the due diligence that we put into the screening process. Sure, there's correlation, right? That no one's going to argue with you, right? There will be, it's very difficult to find completely uncorrelated assets across all regimes. But if you look at Sharia compliant in terms of a screening process, it will contribute to your downside risk protection. And that's what you need when it comes to volatility protection, right? You can't just go in and say, it's going to be one volatility fits all my portfolio. It doesn't. It doesn't, folks. And if you look at different crisis periods, that's where you see actually a convergence of correlations, right? What happened to fixed income markets in the 08, 09? It was supposed to be my protector, but it also went south, right? Yeah. So it's a question of how you can access it. And I think Sharia compliancy offers that level of screen, that filter to protect your downside risk, that, you know, if all things go south, your Sharia compliant component of your portfolio is going to stand up fairly well to volatility outside of markets.
Yeah, well, would that be due primarily to the less leverage in the capital structure?
Leverage, and it depends on, you know, 08, 09 is an easy pick for me because there was over leverage in the market. But even in regimes where you look at, you know, leverage isn't that obvious, I think it also offers that level of downside protection. And that's what you need in terms of volatility protection going forward. Yeah. I will talk to you about private assets going forward and what I've seen in the evolution of private market assets. But I think Sharia compliance assets is overlooked in that regard. Yeah. And there's several studies in the literature that you can point to in the industry literature as well that shows that Sharia compliant markets or asset classes do fairly well in downturns and volatility.
Okay, very interesting, very interesting. And if you go a bit into fixed income as well, so fixed income is, I think, when it comes to retail investors, is probably something that interests a lot of people. We could definitely see on our end, a lot of people are interested in fixed income returns in a Sharia compliant way, but there aren't that many options out there, if you want. And when it comes to Sukuk, Saif in particular, I mean, it'll be interesting to. I think you're going to be sharing with us a presentation, and then maybe we could discuss Sukuk in more detail as well.
Sure. Firstly, I mean, the intention is not to give a presentation as such, or if you have any questions, feel free to ask. I know there's one outstanding question on defaults. I will address them in some time. But if there's anything else you have, please feel free to ask. So I'm going to zoom into the way we look at this Islamic finance industry, and specifically on the Sukuk side of the equation. I'm going to briefly touch on the rating landscape, global Sukuk market performance, emerging market space, ESG, IOFI, you know, the role of Sharia when it comes to ratings, and the default resolutions, and Hassan, as you requested, on the pricing side of the equation. So without ado, we actually rate a substantial part of the global Sukuk market at Fitch, more than 70% of the dollar Sukuk markets, to be specific. majority of them being in the Middle East and Asia, where these are the hinterlands of the Islamic finance industry, but increasingly also in Europe, some in Africa, and an issuance in America. If you look at the the institutions which actually issue sukuk, to a large part they're sovereigns, about close to 46%, followed by financial institutions, corporates, supranationals, and we have seen increasing diversity over the past 2 years, where we saw sovereign wealth funds entering the market. We saw large corporates from the US and Ireland entering, namely AerCap and Air Lease, which are aircraft lessors. UK, a few years ago, they issued sovereign sukuk, which was the second time. South Africa issued the first rand sukuk end of last year. Philippines entered last year too, and they had mentioned that they aim to come to the market next year. So a lot of momentum there, but if you look at the core heart of Islamic finance, it remains the Middle East and Asia. When it comes to the rating landscape, about 81% of the global sukuk market, or at least the sukuk that we rate, actually investment grade. Majority being in the A category of 37%. And when it comes to the outlooks, actually 95% of all Fitch rated sukuk are stable, and about 1% in the positive space. And when it comes to defaults, as I mentioned earlier, no Fitch rated sukuk defaulted this year. In all our coverage, and we've been covering sukuk for more than 10 years now, there's only one sukuk default. So it speaks to the credit health of the sukuk market. Similar trajectory when it comes to Islamic finance, Islamic banks, supranational entities, majority are FIs and based out of the Middle East. And 66% of them being investment grade. When I talk about the outlook for the sector, as I mentioned earlier, that we expect the Fed rates to be cut to 3.5% by the end of next year. This is going to create a favorable funding environment, and we might see more issuers tapping the sukuk market and bonds in emerging markets at large. If you look at the investor appetite for sukuk, so who are the major investors in sukuk? They're actually banks, financial institutions in the Middle East and Asia, but primarily the GCC. And if you see the liquidity profile, it is actually intact. And with the cutting of the interest rates, we expect that the appetite for emerging market debt, of which the Middle East is a big part, is going to increase. Nevertheless, there are risks, right? So the geopolitical risks are still present in the Middle East. It is yet to be seen how the situation in Syria materializes going ahead. Islamic finance industry and sukuk specific is not cocooned, as you might know. It is part of the macroeconomic system. But when it comes to sukuk, it also faces specific Sharia-related complexities. Recently, there has been a draft standard in discussion when it comes to IOFI Sharia Science 62, which I will discuss in some time, and the risks which Sharia compliance poses. But sukuk is, as an industry, as an asset, as a segment, is really come a long way. It's the size of the industry is around $900 billion across all currencies. If you talk 10 years ago, many of the global asset managers didn't even know what sukuk were, but the understanding, maturity, and the awareness of the asset class is actually improving. So if you look at who are the countries which are the major issuers of sukuk, so they are Malaysia, Indonesia, Turkey, the GCC countries led by Saudi Arabia, UAE, and Qatar and Bahrain to some extent. If you combine all of the top 10 jurisdictions, the share of sukuk as part of the debt capital markets is around 30%, which is becoming a bigger part of the story. In the GCC specifically, sukuk is around 40%. So if you are an investor in GCC debt, sukuk cannot be ignored. It's a big part of the funding story. Let me talk about the space of emerging markets. It's been a very interesting year where emerging market debt issuance so far, I'm talking about US dollar and outside China, it reached around $195 billion so far in the first 11 months of 2024. And if you look, who are these investors? Who are the issuers? The majority of them are actually Saudi Arabia, followed by Turkey, and UAE. But why? And this is across both sukuk and bonds. There has been actually active efforts to develop the debt capital markets in these jurisdictions, driven by funding needs, diversification efforts, meeting upcoming maturities. There's ambitious visions and agendas in many of these OIC countries, and part of it is coming from the sukuk market. If I'm to go ahead and talk about the ESG space, there's been a huge momentum when it comes to ESG debt instruments globally, and Islamic finance is also a big part of the spectrum. The size of the ESG sukuk market is actually around 5% if you look at the global sukuk market, so just 5% of the global macro sukuk, but it's fastly growing. So the growth of ESG sukuk has actually outpaced the trend of the global sukuk market, and it reached $45 billion approximately, and it would approach $50 billion. But I think it's interesting to observe what is driving the ESG story. So, because there's a lack of ESG sensitive investors in the core OIC markets. Many of the ESG sensitive investors actually located in Europe and the US and partly in Asia. So we had an interesting case recently in Indonesia where the sovereign issued 3 tranches of sukuk, the 5-year tranche being non-green, the 10-year tranche being non-green, but the 30-year tranche was a green sukuk. We saw that majority of the investors in the first 2 tranches, which are non-green, they were from the Middle East and Indonesia and Malaysia, and the investors were FIs and to a large extent. But if you look at the 30-year tranche, the majority of the investors were actually investors from the US, North America in general, and Europe. And the sovereign was actually able to attract a different kind of investor base. While FIs were the common investors when it comes to the 5-year and 10-year tranche, the majority of investors in 30-year tranche were actually pension funds. They were actually insurance companies. They were actually fund managers who had an appetite for longer tenor instruments. So ESG labeled issuances and sukuk can actually help tap a different kind of investor base. But why are Middle Eastern investors still tapping the sukuk market? Well, because they don't want to exclude the domestic investor base, many of whom are Islamic banks and have a strong appetite to invest in sukuk, given that there is a scarcity of sukuk in the market. Again, almost 100% of the ESG sukuk which Fitch rates is investment grade. When I talk about IOFI implementation, as you might know, IOFI is the standard setting body which sets Sharia accounting and governance standards for the Islamic finance industry. And around 20 jurisdictions globally actually adopt IOFI Sharia standards in varying capacities. They're important because, a few years ago, for example, we had the UAE adopt the IOFI standards, Sharia standards, and specifically IOFI Sharia Standard 59. This had some implications on the global sukuk market, and that for a few months, the activity in the UAE and to some extent globally actually went through a softening because of UAE issuers, investors, and UAE regulators specifically asking that if UAE-based entities want to invest in sukuk, they would have to be IOFI compliant. And they need to have specific language and tangibility language to make it IOFI compliant. Many sukuk internationally are actually aiming to comply with IOFI Sharia standards so as not to exclude UAE investors and arrangers, which are major stakeholders in the global Islamic finance space. Come last year, when we had IOFI, the draft standard issued by IOFI for Standard 62, which is different from Standard 59, where the standard actually proposes to shift the sukuk from asset-based, which are majorly senior and secured debt instruments, to asset-backed securities, and with the risks and recourse of investors lying to the actual sukuk assets. Bear in mind that till date, majority of sukuk investors don't actually have recourse to the underlying assets, so they're not secured debt, they're not collateralized debt. They are unsecured obligations of the issuers. So there has been a lot of momentum, a lot of talks in the market on the implications this will have. If there is a market appetite to have asset-backed securities in the Middle East, or not, bearing in mind that, there really is no market for asset-backed securities in GCC, Malaysia, Indonesia. But the impact of the standard depends on three factors. Number one, what the final standard looks like. We don't have the timeline when this will be implemented, when this will be issued. Who adopts these standards? And third one, how it's adopted in the Sukuk documentation. And this will effectively determine the impact on the credit profile of the Sukuk, whether it will continue to be seen and secured, for example, or whether this will become a different product as such or not. Just to give a background, I mean, we at Fitch, we do rate, we have been rating structured finance securitization products for decades. But this is fairly new product in the market. Nevertheless, the risks remain, and we will report the market developments we are seeing. Let me quickly touch upon the Sharia side. Sharia has a role when it comes to the Sukuk performance. Sharia scholars, they have a tendency to push for the market price, or the maturity value of the Sukuk being, for example, not fixed, being based on market value. This creates a risk, right? So based on Fitch rating criteria, if the Sukuk are exposed to market risk upon repayment, the Sukuk is unrateable, for example. So Sharia also determines, what assets are chosen at initiation. The role of Sharia scholars, for example, tangibility events in the documentation, and we can dig into this deeper if you wish. When it comes to defaults, I think there was a question on defaults in Islamic finance and Sukuk specifically. Only 0.2% of Sukuk have defaulted. That's a fairly low number if you think about this, but this stems from multiple factors. One of them being that who are the major issuers of Sukuk? They are generally highly rated sovereigns, whether in the Middle East, Malaysia, Indonesia, for example, Turkey. And actually, there has not been any sovereign Sukuk default till date. So recently we had Maldives who had issued a Sukuk, and sometime a few months ago we had downgraded the ratings to CC because of external financial challenges, and they had issued a Sukuk and with the coupon payment due, but even they had paid their coupon payment. Nevertheless, the external financing challenges remain high for Maldives specifically. Many of the defaults are linked to corporates, some to FIs. But if you look at the resolution, whether investors, did they get the money back or not, there's still lack of precedence in many of these jurisdictions. Many of the court systems in the GCC countries, for example, they don't have experience in dealing with Sukuk defaults. So investor uncertainty remains on whether investors will get the full amount or not, whether they will have recourse to the issuers or not. Now, if I may talk about the pricing of Sukuk, we at Fitch, we do a study almost biannually, and sometimes more, on how the pricing of Sukuk compares to bonds, right? We look at the same Sukuk and bonds issued by the same obligor, by the same issuer, and the majority of the times, 0.9 out of 1, if you look at the correlation, the price is strongly correlated. So Sukuk generally don't tend to have advantage or disadvantage when it comes to the pricing flow of Sukuk compared to bonds. We had 50 cases recently in the first half of the year. Nevertheless, it's important to highlight that whenever there is we had seen that whenever there's instances of geopolitical uncertainty, interest rate risk, or even driven by Sharia-related factors, the pricing differential between Sukuk and bond differs, right? So we have seen that the yield to maturity, for example, for Sukuk is tighter than than comparable bonds, and this highlights one condition, that the demand for Sukuk is actually more resilient. Because as you know, Hassan and Rumi, there's a shortage of supply in the market, so investors tend to hold their Sukuk. Liquidity in these products are generally not that great compared to conventional bonds. And this reflects in the pricing again. That's it from my side. I'll be happy to answer any questions you have, and I'll give back to you, Hassan.
Yeah. So thanks very much for the overview, Saif. That was very insightful. I've got one question around. So when you're looking at Sukuks, right, the accessibility, because you said that most of the sukuks are basically owned by or bought in by the Islamic financial institutions, the Islamic banks. So it's probably held to maturity, right?
Yeah.
What do you think are the main obstacles to accessibility, whether it's investors, other types of investors who want to buy sukuk? So that's probably a supply constraint if you want. And then on the other side, accessibility when it comes to, for example, not the sovereigns, but a business is doing well, for example, in Saudi Arabia, maybe a family-owned business that wants to raise funds using debt-based, Islamic debt-based mechanisms. What do you think are the main obstacles to people like that, or maybe the reforms that are required to allow people or companies like that to come and issue sukuk, raise funds using debt, and then you'll have a bigger supply in the market, so retail investors could come and allocate a portion of their portfolios to purchasing basically Islamic debt across the credit risk spectrum?
That's a beautiful question. So the accessibility of Islamic investments specifically depends on which jurisdictions you are in, right? So you have jurisdictions like the GCC, the bloc, the 6 countries, where the Islamic products are more available, right? They're more accessible. For example, in Saudi Arabia, for example, you have a robust Islamic asset management industry, which caters to institutional investors and retail investors. I think the size of the industry is expected to be around 300 billion in a few years. And if you look at the mutual funds industry in Saudi Arabia, about 95% of it is actually Sharia compliant.
Okay.
And split between, on the public side of, I'm not talking about specifically on Saudi Arabia public funds. So, they're split between equities, fixed income, money market funds. But they're actually much smaller if you look compared to the private funds in Saudi Arabia, where the majority are equities and real estate funds. It's understood that a huge chunk of these private funds are, actually Sharia compliant too. That's an expectation, at least. Of course, there's no public information on those funds. Having said that, if you compare the GCC bloc to, let's say, jurisdictions which are, non-OIC countries, for example, the accessibility and availability of Islamic products are much limited, right? So it depends on the development of the financial sector at large, right? And then the added layer of Islamic finance as such. And this is both a function of both demand drivers and supply drivers. So demand drivers, is there, appetite? Is there a Muslim population or not? Number one. And first thing, are they sensitive to Sharia requirements or not? Because you have countries who have Muslim majority countries, but the population at large is not Sharia sensitive when it comes to riba or financial affairs. So the Sharia sensitivity is generally higher in the GCC compared to some of the other regions. But there's also the supply drivers where, okay, you have demand, but the regulations aren't supportive, right? You don't have adequate product, you don't have adequate investors, you don't have adequate companies who offer these products. So all in all, it's a function of geography where you are. Malaysia has a robust, again, as you might be aware, even when it comes to asset management, when it comes to sukuk markets, when it comes to equity markets, they have been having a good performance in that regard. Accessibility, again, having said that, it is a constraint. Sukuk, and Islamic equities in general, they are actually much smaller universe compared to the broader universe of conventional products. So, but it's not how it was 10 years ago. There has been active efforts, for example, from the governments in the region to develop the debt capital market, sukuk and bonds. This was, so for example, in Saudi Arabia, 2017 onwards, when oil price, had really taken a hit, the government wanted to diversify their funding, right? So you had Saudi Arabia coming to continue to the real market, to the local currency market to issue sukuk, and they've been doing it on a monthly basis. In the UAE, the federal government here, they have been issuing dirham sukuk over the past 2 years. Same story in Bahrain, same story in Qatar. So the availability of products is improving, but has the pickup been similar across the other segments, across corporates? Yes, we have been seeing larger corporates in Saudi Arabia, for example, tapping this, the debt capital markets. But it's not how you cannot compare that to the same level as the US or the UK, for example. But the picture would be different 10 years from now, I expect, where you will have more corporates, more non-GREs entering the market. But FIs, financial institutions, they have been following the sovereigns. They have also been active in the DCM space.
Okay. Thank you. So I mean, going into alternative investments, Rumi, I know you've also worked in private equity and the likes. I mean, what are your thoughts on private equity, venture capital, and even when it comes to hedge funds in the Sharia compliant space? Like, I know they're obviously less prevalent, but do you see a situation where you might start to see more and more institutional players go into these spaces?
Yeah, I think from the traditional asset class point of view, there's been a shift in the developed markets well over 20 years ago, right? Move towards alternatives. You're also seeing now large pension funds, for example, accessing which they wouldn't touch previously, hedge funds and PE. The natural impediments that come to mind is illiquidity. That comes as part of the parcel, if you like, when you access alts. But alts is, you're going for high octane returns, so that justifies the risk. What we're seeing right now is, a lot of creativity, if you like, innovation going on in PE markets, not just with respect to, bringing in the ESG side. And I noted in Saif's presentation, he had a slide and he said one of the issues was there's not too many opportunities out there for Sharia-based ESG, right? Because there's another element that you have to bring in. But liquidity, right? So you're finding now, and I don't know, Hassan, in your neck of the woods, private credit funds offering monthly distributions, right? And so when I go into private credit investment, what I look for is to what extent my manager has de-risked the investment for me. And de-risking can be waived, going forward with respect to lower length of maturities, more favorable covenants, higher downside protection risk. If you can, more robust forms of collateralization. If you can bring all of that and package it for me, to me, it's de-risking, and it's going to be an incentive for me to invest. So I think Sharia compliancy can play a role in that. But more and more, I'm seeing that, if I were to bring you a private equity investment, say 5 to 10 years ago, and say you wanted distributions less than certainly, I'd say you're joking, right? I can't hedge against the public markets for you and bring you, some kind of relief from the J curve as well. But now you're seeing, confluence of those elements now coming in. So the demand, the threshold for me to get into private equity is not just high octane returns, but it's also, you're going to offer me much more favorable covenants. You're going to offer me liquidity, not having to wait a J curve 5 to 10 years. And you're also going to offer me some kind of an exit proposal right at the get-go. I need to see your exit plan. So the recent COVID period really pushed, I think, private equity managers as rates went up, access to leverage got curtailed, but investors were coming at them from other sides. So now you're seeing, in the developed market world, I don't know about Hassan in your neck of the woods, but you can get a exposure to private credit offering 12% gross, but monthly distributions, right? You can get exposure to private equity with fairly sizable EBITDA-based exit returns, but also giving you annual distributions, right, from the get-go. So, I think the demand from the investor base is becoming more and more rigid in terms of what they want. But I'm asking you, and this is a question for both of you, whether or not Sharia-compliant private equity, Sharia-compliant private credit, Sharia-compliant private markets, let's call it, can provide that kind of insulation that investors are looking for.
Yeah, yeah.
I think that's a really, really interesting. If you can carve a niche for that in Sharia-compliant private credit, I think that's going to be a very unique, a proposal out there. I don't know what you and Saif have seen in the markets, in private markets in Sharia going forward.
Yeah. So I mean, I could speak on the private credit side, if you want, Rumi. So I mean, we've obviously started Qardus initially on the peer-to-peer side, on the crowdfunding side, and over time we've reached a stage where we started having these conversations with credit funds and basically fintech lenders in this space. And obviously, as you mentioned early on, the private credit markets exploded. Family offices love it in Europe primarily, I would say. And we've been able to offer exposure to a unique, let's call it a niche in the SME space that allows for that gives even not necessarily a Sharia compliant fund, but even a conventional fund access to something they weren't able to access before. With the condition of coming into the structure using a Sharia compliant manner. So these are the discussions we've been having in general, and what it comes down to is, as you said, monthly repayments. The principal tends to come further down the line once you've drawn down the entire facility, but the lenders basically are going to get paid on a monthly basis. Primarily using either wakala or murabaha facilities. The advance rates at the moment here in the UK, I would say, range anything from 60 to 85%. So I mean, depending on which lender you go to, so it's quite so it does put the fintechs in a situation where some of them must go out there and find a junior facility to support the senior lender, and it's quite a tough market at the moment, I would say, primarily because rates are so high. So people are less likely to take risks when rates are so high. That's probably went into the venture capital space as well, where no one wants to fund the venture capital firms anymore, or as much as they did before, at least here in Europe, just because the opportunity cost is much higher, or the rates, the risk-free rates in brackets are much higher. But yeah, I mean, to answer your question, I'll try. Yeah, definitely on the Sharia credit, private credit space, there's a very interesting opportunity here, and we're taking part of it as well, because we're basically diversifying our funding sources and looking to bring on institutional investors as well on the platform.
And I think that's a offshoot of the direct lending that you do, and all of these attributes that you're talking about that you need to go through, whether the investor likes it or not, right? That doing the due diligence, not just the monthly repayments, but doing all the de-risking that you're doing compared to the syndicated loan market, right? I think is a very distinctive proposal that you bring to the table. And as you say, it's hard. It's hard to find a cogent private credit, Sharia compliant, de-risked strategy that'll all come with all these attributes that can offer me de-risking and diversification. Whereas I could go to the syndicated loan market and get something off of a bank, but not necessarily have everything that you're doing just because you're in this space. Do you see where I'm coming from? It's just that as an investor, I'm always looking towards, can I get de-risking as part of the package so that I don't have to do it, right? And I think the demands on you, Hassan, running this fund should lure investors just by the fact that you're going to have to go through this. It's just part of the parcel, whereas the syndicated loan market doesn't really offer that to that extent.
Yeah, definitely. I agree. I agree with that. There's a lot of work that goes into the whole process, whether it's even sourcing the deals, underwriting the deals, monitoring the deals.
That's right.
And yeah, I definitely agree with that. I definitely agree with that. Saif, do you have anything to say on this matter, or
I mean, thank you very much. But the way I'm seeing this from the perspective of the Middle East, especially focusing on Islamic finance specifically, yes, there are some news here and there, but I'm not seeing a trend, right? Where there's partly because these are private funds, but we don't. I haven't seen trends of Islamic private equity funds coming out, or not private equity,
Mm,
private funds coming to the market. It talks also about the maturity of the asset management
mm,
industry in the Gulf as such,
mm,
where
mm.
Europe and US are
Evolution.
more developed.
Yeah,
Not
yeah.
that there's no demand as such.
Mm,
Many of the investors in the Middle East, they actually have offshore investments, as you might know in the West,
mm,
and some of them would be interested in such opportunities. But sitting in the ground here, it is still a developing story.
Mm. Okay, okay, very interesting. When if we were to, we're running a bit short on time, but if we were to discuss one very interesting, I mean, obviously we're all following what's going on in the cryptocurrency space,
mm,
especially with Trump
mm,
tweeting or Xing about it, whatever the lingo is, or truth socialing
mm,
about it every moment. I was just wondering. Uh, it's very interesting to get your thoughts on cryptocurrencies in general, as well as if we were to add this layer of Sharia compliance as well.
mm.
Uh, what are your thoughts on cryptocurrencies? And do you see a distinctively Sharia compliant angle here as well?
I will let Rumi
Let me
speak.
just say on the non-Sharia side, for you guys are the experts here, resident experts. But look, I think the skepticism about crypto in general, I think that ship has sailed, right? It's here. However you want to, you've heard Jamie Dimon and all of these CEOs go back and forth about it, but I think it's here. It's a question of when central banks start to use it as a form of their assets, right? Um, so on a diversification basis, you're getting some hedge funds as well. Have some allocation into crypto. The question is whether you can weather the volatility, right? One day it's 65, another day it's 105, and back and forth. But I do think there's a role for it if you have an objective policy portfolio, whether you include it in your opportunistic or whether you include it in diversification your liquid assets, right? Because these are kind of highly liquid. But I don't have much to say on the Sharia side. I think there's a debate going on. I'm sure there is, but I do see a role for it in a portfolio setting and timing oriented. People come and ask me and say, Rumi, do you think Bitcoin will go to 150 to 200,000? Who knows, right? But the stage, I think, is being set for the new administration. You can just see what's going on with Bitcoin prices, but not that it's going to stay there. But in terms of going forward, I think the next 4 years is definitely going to be more friendly environment for crypto and crypto payments, and also a less, if you like, focus on the due diligence compliance side of it. So, there's going to be obviously detrimental factors coming into play there. But I feel that there is certainly now that question that was posed before. I think that ship has sailed.
Yeah, yeah, yeah. Yeah, I mean, it's interesting times. And like, for example, if you were to just taking this question because
Mm,
I've seen some debate about it.
mm,
If you were to allocate so gold and cryptocurrency, gold and
mm,
Bitcoin, right? Uh,
mm,
do you see these two competing going forwards, or it's just, I mean, obviously the central banks don't have any exposure to
mm,
cryptocurrency just yet,
mm. Yeah.
and have been purchasing huge quantities of gold.
Mm.
to diversify away from the US dollar primarily. So, I mean, what are your thoughts on gold versus Bitcoin?
Yes, look, gold is always considered a safe to, a flight to quality kind of asset. It's done fairly well, I think. As you said, the reserve currency debate is also an issue around gold purchases, and it's very, very sensitive to rates, right? So going forward, what happens in the rate market will obviously it can still play a big role in with gold as a flight to quality and harboring of diversification. But I see crypto differently. I look at crypto more as a adoption of a different form of currency and means of payment, right? So if you see that industry evolving and going forward with what we have now with digitization in general, and if you see that's going to be a play going forward, that's a way I can access digitization is to have an allocation in crypto. I don't see those gold as and crypto really competing against each other. I see it as playing fairly mutually exclusive roles in your portfolio.
Yeah, yeah. I mean, I agree. If you look at cryptocurrencies from the standpoint of removing frictions from payment,
That's right.
makes
That's right.
perfect sense, right? But
Yeah. Yeah.
ask me about the price of of Bitcoin, the price versus the value of Bitcoin.
Yeah. Well,
Yeah, it's an interesting
that's
question.
anyone's guess, right?
Yeah.
But it's been very and I think that's the investors saying more about the new administration play and the fact that you just don't know what this administration is really going to do. But all things are pointing towards not a completely abolishment, but maybe a watering down of the scrutiny that was around crypto payments in general. I think that's a safe kind of proposition to make.
Yeah, definitely. It's been evolving quickly. And okay, so if you go to a couple of the questions we've been having, so one question is, what's your definition of default? Is it missing repayments only, or does it include delayed repayments? Also, why are there even 0.2% defaults given governments can print money?
Okay, I think I partly might have answered the question, but okay, default definition includes missing both the principal, i.e. the face value of the sukuk, and the periodical distribution. So that's what I mean by a default. Why is it 0.2%? Because you have this is across all currencies. So but you could have, I mean, we haven't seen sovereign defaults to start with. So, this isn't a question of us of a country's central bank printing money to pay their default is sukuk. So that's not the space we are in, at least. Most of the defaults have been linked to corporates, some to FIs, but again, those are minuscule if you look at the issuance still there. So
Okay. Then we have another question. Hi, it would be great to address how Islamic finance supports the growth of SMEs in the West. They have to compete with lots of non-Sharia players and don't have access to the same resources, no debt, no solution. How do we connect them with investors and provide them with sustainable solutions? So that's exactly what we do at Qardus. So I mean, I could probably answer that. So yeah, so we've definitely seen that on our end, in the sense that there is a financial inclusion play here, where SMEs, traditionally Muslim business owners in places such as the UK, were growing their businesses the old-fashioned way, where they would I mean, they would reinvest their profits over time to grow their businesses, bootstrap, if you want to call it that, and which takes a much longer time versus someone who's able to take on debt, or take on sustainable levels of debt, basically. And what this created was, I think, a gap where you've got this segment of the market growing slower than the rest of the economy. So that's why we created a non-dilutive financing option, Sharia-compliant financing option, to allow because that was another problem we saw where SMEs wanted to get working capital. They would bring in a dilutive option or bring in new additional shareholders, which is quite expensive if you look at the cost of capital. So we brought in a non-dilutive option to be able to solve that problem, because that's got, I mean, it's got a very positive effect in the sense that a business owner is able to grow quicker and do well. He's able to hire more people. He's able to pay more taxes. He's able to improve his own well-being and the well-being of the people around him. And that improves society and the economy as a whole. So that's what we've been trying to do ourselves. And frankly speaking, there's still a lot of work to be done, but definitely to answer your question, Saqib, the lack of solutions out there has created a gap in the market that needs to be filled. And there's especially a lack of solutions when it comes to non-dilutive financing options. So we can have a level playing field over here when it comes to Muslim business owners versus everyone else. And then there's a question, have you had any experience utilizing offshore structures, i.e. in the Jersey, Channel Islands, for the purpose of Sharia-compliant investing? If so, what is your experience on this? Maybe Rumi, have you ever had experience investing using offshore structures? Or
I've had experience investing generally, but not with Sukuk or with Sharia. I don't know what rigidities that element will bring into it, but there are some options available for offshore investment. If you want to explore that, and that really helps you to optimize against taxation, longevity risk, and that sort of kind of thing. But I think that what Sharia brings onto it, I think you guys are the experts in terms of how that could be accommodated. But I'm sure these kind of things exist because you've got buffers of capital in the Middle East, especially, that's being screaming to be deployed and in a tax efficient manner. So I wouldn't be surprised if there are structures and vehicles available to do that.
Yeah, definitely. I mean, I've never come across when it comes to the Jersey and the Channel Islands. I'd say I've got limited knowledge of that, even though we've got some investors who have set up structures over there, and we haven't seen any issues on our end in terms of how they go about generating returns and the likes. So yeah, I'm pretty sure.
I think, Hassan, maybe they're talking about whether or not you can set up an SPV in one of these jurisdictions with obviously the tax advantages, right? And then actually get deployed to Sharia compliant investments out of those SPIVs. Right. And would that be any different from just setting up a standard SPIV?
Yeah. So from our experience, if you compare it to onshore structures, onshore SPVs, definitely the offshores would have more tax advantages, but the threshold will have to be higher. So if you're looking to, for example, for the unit economics to work, you need to set up much larger structures in these offshore areas. I would say that's the major obstacle, in the sense that you could easily set up and run maybe a couple of £1 million onshore. When it comes to offshore, you've got to look at these much larger ticket sizes, much larger funds to make the unit economics work. So I would say that's probably the difference. So tax advantages definitely, but on the other end, definitely much larger ticket sizes for the unit economics to work when you're
to work out. Make it viable.
Yeah. So very good. I mean, we've just gone 10 minutes above the recorded time. I mean, it was a very interesting conversation, and I'd like to thank again Saif and Rumi for their insights and for their time. And we've recorded this roundtable, so we'll definitely send it across as well to anyone who hasn't joined this call, as well as the participants. And we look forward to having some additional Qardus roundtable sessions on different topics, and hopefully Rumi and Saif can join us on other conversations as well.
Yeah, sure. Yeah, thanks, Hassan. Thanks, everyone.
Thanks again, guys.
Hassan, thank you for the opportunity. And let's stay in touch. Of course, Rumi, good to see you too. See you in Dubai. See you both in Dubai, hopefully.
Absolutely, Saif. Thank you. Yeah. Thanks,
Take
everyone.
care. Take
Thanks,
care.
guys.
Bye.
Bye-bye.
Bye.
Bye. Bye-bye.